Good evening. My name is Jake Ackerman with Ackerman Financial Group. This week in the market, we've seen the S&P 500 close down 6.02%, bringing the S&P to 3,900.86. Beginning of the week, we've seen the S&P 500 mostly flat. Leading into Thursday and Friday, we started seeing some increase in selling pressure and volume. Friday, a really big increase in volume, and the reason for that, simply the CPI number released at 8:30 this morning. Significantly higher than expected. Expectation for the month of May was 0.7. We've seen a 1% increase. Year over year, unfortunately, the expectation was 8.3, and we've seen 8.6. So quite a bit higher than expectations is why we've seen the big sell-off that we did. And one of the major factors of that is crude oil prices. Crude oil prices are creeping back up for the year highs, 123.18 per barrel. High for the year is slightly over 130. So we're creeping back up there. Going into next week, that could cause us some more issues. For the bond market, there is some silver lining with the bond market. It didn't have as much downward pressure as the stocks. Held up actually fairly well in the morning. Towards the end of the day, we've seen some more selling, but overall, the bond market, and I refer to one of my favorite indexes, that's symbol TLT, that's the 20-year Treasury. We've seen that down 1.2%. So going into next week, I would expect some major volatility towards the beginning of the week. Midweek, it's going to be completely dependent on how the Fed meeting goes. The expectation right now is they're going to raise 0.5%, or also known as 50 basis points. I think they're going to stick with that. Now, what we really need to be paying attention to is their 2:30 or their 2 o'clock press conference with Fed Chief Jerome Powell. We need to watch his verbiage. We need to watch what he's saying, what they're signaling. That's going to really dictate the end of the week, probably the next few weeks. So we'll really be watching that. So, the S&P 500, we really need to watch that. We can get a major leg down if they're going to signal maybe even an increase of their expectations of their tightening and tightening of monetary policy and raising of interest rates. But if they show that they're going to pause because potentially this is an election year, or maybe they're seeing some things under the hood that we may not be seeing yet, they signal a pause, we might see a nice rally towards the end of the week. But it's going to be completely dependent on what the Fed does. I appreciate you joining me today. Again, Jake Ackerman with Ackerman Financial Group. Have a great evening.